Welcome back to Just Ask George. David Wolf here with George Lovato. How are you?
Me.
You.
The head dude.
Indeed.
And you, the dude.
I'm the dude.
The dude.
Along with the head dude.
Right.
We're going to talk some more. This is part 2 of Is There Money Out There? We're talking about scammers, bandits, and stealth money. Right, George?
Stealth money. You like that term, don't you?
I do like the idea that there's money being created from air, from nothing. Some call it printing money. We talked in part 1 about why this is happening. You've got scammers preying on entrepreneurs that are very excited that don't have capacity to form capital.
I also feel it's important. You know, one of the jobs we have in what we do every day through this medium on the internet is to teach and to inform. And I just feel it's important with the state of the economy, the lack of capital formation, the lack of lending that's going on through normal channels.
Right.
There's been sort of a proliferation of these guys out there that talk about these very complicated methods of borrowing money, raising equity, doing all these wonderful things. And as you pointed out in our pre-show discussion, if it's too complicated, then it can't possibly be real.
You need to be suspicious if you see very complicated transactions with collateralizations and liens against this and that. We were going to talk in part 2 about the flavors that we see the
Right.
scams coming in, or the mechanisms to so-called form stealth money.
Right.
So there's a whole list here. We've been.
I'll start with one, which is that I was got drawn into.
Yeah.
And in the very beginning, it seemed very credible, and it was a quote unquote the forgivable loan. And I was approached not once, but about a dozen times from different sources about these same two people. Mm-hmm. And they were in the business of looking for humanitarian opportunities, affordable housing, mostly affordable housing in third world countries or even in the United States proper. Mm-hmm. And what and as I had done my research on the forgivable loan, dealing with charitable organizations, is that sometimes charitable organizations want some protection during the front end development phase, construction phase of something that they're donating money to have built. And so I had talked to a couple of foundations, and they said usually we require either a bond, a performance bond, or a letter of credit, and it's just for a period of time. The performance bond is until the completion of construction, or the letter of credit is through a very short period of time. Usually we don't want to see construction go beyond 12 months, so it's usually around 12 months. Then everything's closed, everything's built, so on and so forth. They go on their way. So as I talked to these two guys, they said, we just need a letter of credit. I said, what about a performance bond? Oh, no, we don't want that. And you just hand us a letter of credit, and a year later we hand it back. Okay, so that fit with a couple of the organizations I spoke to.
Okay.
And then the next thing was, after it's all done and we've signed off, then we're basically going to forgive that loan, and off they go. But we do not lend money for operations. It's only for construction. So we go down that path a little further, and as time passed, okay, the layer of the onion was peeled back, and they'd show me this document, and then the next document, and the next document. From the very beginning, like I said, it all sounded like it all fit together. Everything that they explained on how it was going to work seemed like it worked. I had checked this out. I had done my due diligence. But as time went on, it began to become a little more sinister. The documentation was obviously not what I'm used to seeing in the finance world, in the banking world. These documents didn't appear to be written by lawyers, or for that matter, even influenced by bankers or lenders. And we had a meeting with these two guys, way through the process, trying to put this one transaction together, trying to create the LC and the letter of credit. And during the meeting, we were sitting with a package that was not yet complete, mind you. There was still more to do on it. And the quote-unquote billionaire that's going to make this forgivable loan looked at me and said, "You don't need that." I said, "I don't?" I said, how is a lending institution, or for that matter, a group of investors that are going to syndicate a guarantee for this letter of credit for this process going to make any kind of decision at all whether they want to be involved without any information on the project? So you don't need it. He said, I'm going to take that letter of credit. You're just going to go get it, like it was something you do like that. And then you're going to hand it to me, and then it's going to be assigned to me, and then I'm just going to hand it back to you the next day. I said, well, then why do we need it? He said, well, it just proves the viability of the project. Boom, bang, whistles, bells, so on. I realized at that point that this guy was absolutely positively full of you-know-what.
Yes.
And that the project, the process and what he was offering was not real. It tried to complete the remnants of this package for the client and actually plug him into a real resource. And by that time, everybody sort of lost their juice on the project. These two guys basically killed it by telling the client that this isn't ever going to happen. The letter of credit is key and critical. That's what you need. This documentation is worthless. You don't need it. Just get the letter of credit and assign it to us.
We just need that. Yeah.
That's all we need.
Right.
And they basically put the pin in the balloon, and there goes the air out of it.
That was it. And this is fascinating.
Yeah, and listen, there were literally a dozen sources that had come to me and says, you really need to look at this. We've looked at it. We like it. This can work. This can work for those deals that, for nonprofits and so on and so forth. And like I said, in the beginning, it looked real.
Well, what's fascinating is to your keen eye, and you've been around this stuff for many, many years, even to have, at that level, to have, quote, fooled you or been able to sort of operate that way and have you believing in the very beginning, understanding why that happened.
And believe me, these projects, the ones I was looking at, were good projects. I mean, they weren't. Right. There were real people
the projects
behind them
themselves. Yeah.
Right there, and so that was the sad part of it. The forgivable loan, where you hand me an LC and I hand it back the next day. That's when
it started to look really not kosher. Well, and this is a flavor of stealth money or scamming. But a lot of us out there, I see a lot of broker type of approaches going on out there, out in the field. You know that. The flavors that these come in are abundant. We see things like railroad bonds or medium-term notes, international banknotes from, yes, exactly. Or we see U.S. Treasuries from the 1930s.
Somebody showed me a $500 million U.S. Treasury note dated from the 1930s.
And you saw a visual on the...
It was, and of course, I wrote about this in one of my blogs some time back. That this was absolutely not useful, and it was certainly counterfeit. And the bond, a U.S. Treasury note was not issued in those denominations in those days. So that was key number one. Key number two was you could, if you look closely on the image that they sent you over the internet, you could tell that it really didn't look like the real McCoy through some study. And one of my contacts in the investment banking industry, I had sent it to him and said, can this possibly be real? And he said, oh, no, here's the link. Go here. I think it was Department of Treasury had the whole thing on it. So that one definitely is not a good one. The other one is international banknotes that trade on a secret platform. Now that one.
now is just as an aside question, George, is there there is a form of this that is credible?
No.
Or never?
No.
In other words, secret platform. But isn't there? What about you hear about Euroclear and those platforms? What?
Let me talk about this one.
All right. Please.
This guy called me one day and he said, I have this collateral and it's basically unlimited. Oh, really? Well, these are international banknotes that are traded between the banks. This is how banks make all their money. I said, really? Tell me more. And he's going on about how there's this secret platform that no one is allowed on but very few banks, and they trade these notes. And I said, so how do they trade them? And he said, oh, well, That's a proprietary. I can't tell you that, but I can tell you that it's very, very interesting. And of course he's stumbling, he's stuttering, and then of course away it goes. But there's one that's not unlimited collateral. When you hear that, walk away from that. Another one is issuing insurance bonds to guarantee notes, to guarantee borrowings, to guarantee loans from lenders that they issue the. And you can find, the first thing that happens when you start to listen to this stuff is that someone has got that small dictionary of banking and finance terms, and they've opened it to a page and said, "Oh, I'm going to use that word today, or I'm going to use that terminology today."
That bad, yeah.
And it's really easy to place. So insurance bonds are issued to a lender. The lender is guaranteed that the loan will be paid back. And so I asked the question, who's making this credit decision? Obviously, the insurance company's has to analyze the level of risk. Oh, no, we have a connection. We issue the bonds. I said, you're an insurance company? No, we're the contracted company for the insurance company. Well, give me the insurance company's name. He mentioned the name, and that is easy to look up. Okay. That's easy to research. So I took his name and number down. I had the name of the insurance company. About 3 days later, after a thorough search, there's no such company on shore, okay, registered with any state department of insurance. Dead. I asked him if it was an offshore company when I talked to him again, and he said, no. I said, well, where's it domesticated? Which state? It's licensed in. I said, no. Where are they located? What state is essentially what represents the original licensure for this company? No answer. Okay. Insurance company didn't exist. The latest one, actually probably the most creative one I've heard, is an insurance policy is issued, a letter of credit is issued. The letter of credit sits next to a note. You can go to any bank, okay, and get that bank to make you a loan, and then we go to another party that puts up CDs behind the letter of credit, and the insurance policy here is issued to the individuals putting up the CDs.
I could barely follow the logic.
Boom, 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 boom.
Yeah.
I mean, it's just
so
like
complicated.
There's the complexity. There's the one with the complexity right there.
Yeah.
And that makes absolutely no. And when you ask who's making the credit decision, oh well, there doesn't need to be a credit decision because you've got all this liquid collateral.
It's ridiculous. I mean, unbelievable. We're running out of time, but obviously there's a whole library. There's a whole lot of this going on right now because of the economy. Because there's less real credit available.
There's less formation, capital formation out there. That's driving that. Then you have a host of ideas, people with ideas, and then you have a lot of small requests, and you have a few of these other things occurring at the same time, and then you've got these guys that open up the banking and finance dictionary, pull a word out, and that's the one they're using today. But I think the most important takeaway that we've got from this program, part 1 and part 2, is it's easy to do due diligence. It's really easy, and you've got to start there. If it sounds too good, it probably isn't real. If it's too complicated, like this last one I described, it's probably not real. And when you hear misplaced words, misused terminology, you need to be very suspect at that point that you need to get into it a little further. Due diligence starts with finding out where these corporations are registered, finding out where these people physically are, proof, that they're real, and then start your search on a host of other people out there that they may have affected. That's really easy to. I mean,
in the case of lenders, I know we're almost out of time. Lenders, they ought to be able to give you tombstones like you do at BH Capital. Show me deals you have completed, right?
Let me tell you what we do. We've built that website for the purposes of due diligence. We want everybody that comes to us that wants to hire us as their corporate finance consultant or merchant banker, we want them to know who we are. So we're basically an open book. Now, There's information. There's if you look up BH Capital, you'll find hundreds of listings. You'll find the affiliate websites. You're going to find articles, newspaper articles. You're going to find stuff from the Wall Street Journal, Barron's,
Credible Tentacles,
Inc.
Yeah.
You're gonna find the press kit. Okay. If you look someone up and it's sort of a blank slate, then you might wonder.
So
okay.
Better Business Bureau can help where they are physically.
Departments of corporations in each state, finding out if their corporations are really filed, or they're real corporate corpuses.
Okay.
You can go to you can actually go on the internet now, and I think there's how many different sites can you do to look up on somebody?
Yeah.
And actually do a mini background search, and then for $19.95 in some of these sites, you can really get a lot of information on these people.
Okay.
And you can also find out if they have aliases. I mean, this is about 6 months ago. I had a guy approach me that said, "I need a lending partner," and he wanted to use BH Capital as the catalyst for this new thing, which was endless collateral in the form of a surface mine of this particular mineral that basically was valueless. But he wanted to put up parcels of this surface mine that was in the thousands of acres as collateral for various loans. And I looked this guy up, and he had like 6 aliases.
Ay.
So there's another sign.
There's so much.
So the takeaway is, do your due diligence. If it's too good to be true, it probably is. If it's too complicated, it probably is. If you hear misplaced lexicons, you need to be suspect. Pay attention, and remember, it's the old, tried and true way of forming capital. There's a process to it. It hasn't changed.
Thanks, George, for all of that. There is money out there. Buyer beware, entrepreneur beware. For more information, www.bhcapitalltd.com. George, we'll see you next time.
All right, man.
Just Ask George.
Great.